All right, good evening, everyone. This is Tyler Dagler at Marshall Reddick. Thank you so much for being here with us tonight. We appreciate it. Tonight, we're going to be talking about Orange County real estate in a market that seems to be changing every single week. We're going to go over where things are at now, why they are that way, and where I think they're going to be ending up. Today, we're going to talk about being a buyer and being a seller in this market. Two very different scenarios. Each has their own hurdle and their own advantages, and we're going to go over each of those today. We're going to briefly talk about 1031 exchanges. For those of you on the call who own investment properties and are considering and reevaluating your portfolio, 1031 exchange is a super helpful tool to help you defer those capital gains taxes. And in the next week or so, we're going to be having an entire webinar on 1031 specifically. So if you are in that boat, make sure to shoot me a message. I'll make sure that we get you out an invite. That also reminds me, guys, we're not going to be doing a live Q&A tonight, but if anyone has any questions, please feel free to put them in the chat box. I'm going to reach out to everybody after this call, and I'll make sure to get you the answers that you're looking for. We're going to talk about what it looks like being a first-time home buyer in Orange County. Not an easy situation to be in, that's for sure, and getting harder every single day, but certainly not impossible. I just opened escrow on a first-time home buyer this morning, so it is still a viable option for sure. We're going to talk about local agents and what we can and should be doing for you. In Orange County, we have one of the most saturated agent markets in the world. Just here in South County, we have 14,000 real estate agents. And the barrier to entry to get a real estate license is not that difficult in California, right? So you want to make sure that you're aligning yourself with someone who can get the job done and do a really good job for you, because there are way too many options out there. We're going to talk about how to make your offer stand out. So let's talk a little bit real quick about Marshall Reddick Real Estate and who we are. So Marshall Reddick is a single pane of glass option for real estate investors. The experienced, seasoned, and savvy investor knows that there's a certain portion of their portfolio that should be dedicated to real estate. Of course, you're in stocks, you're in retirement accounts, all that sort of stuff. But real estate is a portion of your portfolio that should exist, right? It's an appreciating asset. It's something that other people can pay off for you, and it's also a tax shelter. And so we have a couple different options for our real estate investors, i.e. clients, i.e. you, to have real estate in your portfolio, right? So we are a broker. We buy and sell primary residential real estate here in Orange County, but we also do investment real estate all around the country. We have offices in Central Texas, Florida, and Tennessee as well, where we help a lot of people purchase long-term hold cash flowing real estate investments. And then we're also property manager as well. So when I have a client here in California, we purchase them a 3-bed, 2-bath, A-class property out in Tennessee. We then manage that property for them. We handle everything from tenant screening to collections to maintenance, you name it. You just get your check in the mail each month and then your tax statement at the end of the year. We're also a private money lender. So a lot of our clients here, they have over 10 loans open right now, right, on all the different real estate they're working with. So it comes to a point where they need to come to private financing. And so we have an entire underwriting team in our office. All these people do is analyze loan deals all day long. And our flippers, our IEOs, our bridge loan guys, they come to us. We build a loan, and then we bring those loans to our investors. Our investors can then fund those loans in first lien holder position, and they collect the interest. And then we also have an investment fund where you, our clients, our investors, can pool your money together and fund private money deals as well. So there's a number of facets here that allow you to have a certain percentage stake of your portfolio in real estate, and we're happy to help with all. So who's this guy talking to you? This is me. I'm Tyler. Nice to meet you guys. I was born and raised in New York. I went to Clarkson for finance. My plan was to go to Wall Street. I graduated in 2007 and couldn't get a job to save my life. The entire sector had collapsed. Everybody was out of work. Nobody was hiring. So I moved out to California and I got into real estate. I just finished up the negotiation mastery program over at Harvard. And then down here in the right, I just had a couple snapshots of some reviews. I can sit here all day and tell you about all the wonderful stuff I think I accomplished, but I like to have my clients speak for myself. Speaking of, here's our team here in Newport. This is a collection of realtors, data analysts, the property management team is here, our landlord team is here, our tenant team is here, our maintenance team is here. We are a group of professionals, certainly not your average, real estate office on the corner downtown. Everyone in this picture is educated, experienced, and very knowledgeable about what we do. And I hope you guys get to interact with all of them. If you end up investing with us, in-state, out-of-state, going through private lending, you'll get to meet a lot of these wonderful people. And again, on the reviews, right? Just a snapshot. This is just our Orange County office here. So you can see we got currently, and I took this picture last night, 352 people who will tell you what an incredible job that we did for them. So we want to make sure that you guys know you're spending your time tonight with people who are professional, but also do a really, really good job. And we pride ourselves on that. And here's just a snapshot of our Southern California market. Your average real estate house here downtown is doing anywhere from 50 to 100 deals a year. Here we are at 842. And I actually just got a new one in Marietta and a new one in Corona. So I'm excited to start pushing some of these yellow doubts out east here. Here's just a little snapshot of some stuff that I've been working on in Orange County. You can see that we do the entire gamut of price ranges, from your expensive luxury style properties all the way down to our entry level stuff. So there is no part of the market that we do not work at, and there's no part of this market that we're not proficient at. So here's what we're all here to listen and talk about tonight is Orange County. Orange County is a very different market than almost any other market here in the US. Like I had mentioned before, we have offices all over this country, right? And we're actively doing real estate deals in many different states. Now, I personally have 2 in Texas, 3 in Tennessee, and 1 in Florida right now. And those are all clients here in Orange County that we're purchasing for out there. And the markets are all very, very different than here. Our market seems to attract people who really desire a beautiful place to live. Looking at the graph here of values over time, you can see that even when it hit the fan in 2007, 2008, the market didn't really dip here. You can look at this and you can clearly see a dip, but if you were to compare this to places like Austin, Miami, New York, you would see a very drastic delta. Now, Orange County has held its value very, very well. And ever since the pandemic, we're seeing a real tick in values here because people from all over the world are now able to work from home. And you have a lot of people living in places that they didn't necessarily want to live, but that's where their employment was. Now they have the option to live here in Orange County. Perfect example, I have a listing right now here in San Clemente. The family's moving to Tennessee. The buyers are coming from Canada. And I'm seeing a lot of that in a lot of my listings, that a lot of the people coming into Orange County are from out of the state, which is a switch and a turn for us here, because in Orange County, we've been hearing nothing about except for the California exodus for years now. And that has really started to switch with the work from home. At the bottom here, this is just our property class. This is how we evaluate the type of tenant and the type of tenant quality and experience that you should expect if you're investing in Orange County based on price point. This comes from decades of data analyzation on different price point rentals that we have in different markets and how the experience turns out for the investor. We have an entire ebook written on just this specifically. It's about 40 pages, takes about 45 minutes to read. If anyone here is interested in getting a copy of that, please let me know in the chat box and I'll make sure to get you one out right away. All right, let's dive in. Guys, I am a huge data nerd and real estate nerd, so I'm really excited for this part, and we're gonna get into it. Okay, So the biggest story in Orange County real estate, where we sit today, end of August 2022, is low demand. Now, for the past couple of years, demand has been off the charts, absolutely insane. I would put a listing on Thursday, it would hit MLS Friday. Open house Saturday and Sunday, 40 to 50 offers by Monday and Tuesday. That was an effect of these extremely low interest rates we had when the Fed dropped it to zero, when the pandemic hit, right? And you can see that in the previous years here, the massive spike in 2020 here in green, this is when rates went to nothing. And all of a sudden, everybody in Orange County could afford to buy. And that's what they all did. Everybody went out and gobbled up every piece of inventory on the market. We were seeing buyers have to drop all their contingencies, offering $100,000 over in a $500,000 price point. It was an extremely hot market for demand. However, as we've all seen in the news, rates have gone up, and they've gone up quite dramatically. And that really had an impact on demand. Now, this orange line here is 2022. And starting off in the beginning of the year, you can see it was really slow, and it always is. Coming into January or so, everyone's getting over the holidays. Inventory hasn't hit the market yet because everyone who's been remodeling won't hit until typically the end of January, the beginning of February. And then boom, it shoots right up, right? A ton of demand, deals start closing. And then we come into like April and May and the rate hikes start hitting. And then we come into June and the big ones hit, right? And we can see the demand going down. This is not demand based on people wanting to purchase. This is demand based on people's ability to purchase. And when rates go from 3.5 to 6.5, it cuts out a massive portion of buyers, especially here in Orange County, when the average price point is well over $1 million. 3 points makes a big difference on your monthly payment on $1 million. So we can see demand starting to go down. Now, if you look at the arrow, you'll see demand ticking up. So about a month ago, rates dropped a little bit, right? And all of our investors out there and all of our people who've been sitting on the sidelines, getting kicked in the teeth by the rates, saw an opportunity, and we had an increase in closed sales. Now, inventory, we're going to talk about in a minute here, has peaked, right? And rates are starting to tip back up. So I think we're going to see demand starting to diminish throughout the rest of this year. But if there's one thing to remember from this is that demand is down. Now, inventory is also down. And we hit peak about 3 weeks ago. And so for the rest of this year, you're going to see less and less homes coming for sale. In Orange County history, when we hit this point, this will usually create an increase in demands because there's less inventory people are dealing with. However, we have decreased demand as well. So looking at the beginning of the year here, we had low demand. Look at that, or sorry, inventory. Barely 1,000 homes. In a county with millions and millions of people, there were barely 1,000 homes for sale. The market was still extremely, extremely hot. Coming into March and April, like we saw in the last slide, rates start ticking up. Rates start ticking up, it starts knocking out a portion of the buyers. Homes stay on the market for longer. It allows more homes to aggregate on the market and inventory starts to tick up. Come into June and July, further rate hikes knocks a larger portion of buyers out of the market and inventory starts to come back up. Now, if you look at this graph, you look between like May and say July, and we have a very large increase. This was the doomsday stuff you were all hearing on the news. Inventory has increased by 330%, 3 times as many homes on the market as we've had, so on and so forth. And that's true. It's absolutely true. We literally saw inventory go up over 300%. However, even at this peak, we're at about 4,000 homes for sale. Prior to COVID, in a more normalized market, we had about 6,100 homes for sale at any given time. So even though we saw a massive increase in inventory this year due to less people being able to purchase real estate, we are still so far below what a normal market is that we found ourselves in a really interesting market, right? Low demand, but low inventory. And even with the low demand, it is still remaining in a seller's market right now. And that's pretty clearly shown here. So in Orange County, in order for the market to be balanced, we're saying the market doesn't favor buyers or sellers any which way. It's an even market. There's a lot of 50-50 negotiating going on. That's about a 90-day turnaround expected market time, right? So that expected market time is from the time that you put your home on the MLS, you put the for sale sign in the front yard, and you accept an offer, right? So in order for it to be balanced, we need to see homes taking about 90 days. When homes take about 90 days, it aggregates enough inventory on the market compared to the demand to make it a balanced market. However, even with rates going up and inventory going up, we're nowhere near a balanced market. You can see that we need to be shopping over $2 million today in price point for it to be the deal to be more in the buyer's favor. So the buyers have certainly gotten a lot of their power back over the last couple of months as rates have ticked up. You know, a year ago, we were seeing things like inspections, appraisals being waived, right? We needed to be competitive when we were buying homes, so we were waiving these contingencies. Those days are gone. Like I said, I put a house into escrow this morning, and we have all of our contingencies full. It is all still there. What it turns into being is when it comes down to nitty-gritty negotiating, things that don't necessarily have to be done in order to close, but buyers want them to, we're still seeing the sellers being able to call those shots and say yay or nay. And again, we're just looking at the Orange County market as far as values go. I personally do not believe that we have seen our value pop yet. Now, between 2020 and 2022, you see this massive increase in values. We saw this all over the country, right? And this was a direct correlation to rates being so low that there were multiple buyers on every property, and those properties had to be bid up in order to secure a win. So values went up all across the country. However, with the rate adjustment, we're already starting to see correction in many metropolitan markets. We're seeing a little bit here too. Homes that are priced correctly are still getting multiple offers in Orange County. It's still a hot place to be. However, sellers who are up in fairy tale land and or are pricing based on comps from 4 months ago when rates were in the 4s, are having to price correct and come down. And so that's why you're seeing this little dip at the end. It is not because people can't afford, people need to let go of the homes. We only have like 2 foreclosures in all of Orange County right now. It is not a market that is shifting. There is just a large portion of active listings that have needed to price adjust due to the interest rate adjustments. But an extremely, extremely solid market to invest in. And like I said, we're getting more and more out of state and out of country people than we have in years due to this work from home, right? And my personal prediction is that there is a very large amount of wealth that will be moving into Orange County over the next 5 years. It's going to continue to bring our prices up. And here's something to consider. 72% of homeowners in Orange County refied into an interest rate of 4% or less over the last 2 years. 55% of them are at 3.5 or less, and 34% of them are at 3% or less. More than a third of the homeowners in Orange County have an interest rate under 3%. If these people were going to move even into the same price point, they'd be paying a lot more a month, and they'd be paying a lot more in property tax. So what this is going to lead to, this is actually really going to affect the Orange County market for the rest of our foreseeable lives, right? Never before in the history of mankind and lending did rates hit this absolutely historic bottom. And it needed a world pandemic to make it happen. But when it happened, one of the unforeseen things was that everyone was going to refi into these extremely low rates. And now moving for people is way more of an issue than it was before because the cost of moving is expensive, even more so here in Orange County. So I believe that inventory rates are going to continue to be extremely anemic for years to come. Because of that, inventory is going to be low. With low inventory, prices are going to continue to go up here. So let's talk about buying a house. So everything you see here on the screen is what your realtor should be doing for you, right? We're going to talk about where you want to be, what you want, so on and so forth. But when you call somebody at Marshall Reddick and you want to have a consultation about buying a home, we're going to get a lot deeper than that, right? Every single buyer has their own set of tools that they're working with. You all have your own credit scores. You all have your own amount of money that you can or cannot put down. You all have different time frames. Some of you can be super flexible. Some of you need to move now. Some of you are W-2. Some are you 1099. We're going to really dig into your particular situation and figure out how to make you competitive, because that's what you need. Now, if you're shopping over $2 million, you don't need to be that competitive, right? As long as you have the funds to close on that deal, the market today is in your favor. But if you're shopping entry-level price point, maybe $1.5 million, you're still going to have competition when you go to the offer table. And so we really like to focus on how to make you the most competitive buyer that you can absolutely be. And that's what really sets us apart from the other brokerages that I've worked for. And I have worked for other brokerages in my past. Marshall Reddick is not my first rodeo. Marshall Reddick really emphasizes making you the star and making you as most competitive as you can be, because you don't want to be shopping for a year and a half, putting in 15, 20 offers, continuously losing until you finally find a property that says yes, right? You want to be able to make sure that when you identify the property that you want to move you, possibly your family into, that the pieces are in place to get you a win. And that's what we do here. And a big part of that is financing. So something 75% of all home purchases in Orange County have a financing portion to them. And that makes sense. Stuff here is very expensive. We partner with Reed Hazard here at Marshall Reddick for our lending portion. On a personal note, I've known Reed for many years. We are very good friends. We live in the same town. We live a couple streets over from each other. And he is really a staple person in this town. He's an extremely good person. He's very educated, and he does a lot of loans. And why that's advantageous to you is because he knows all the loopholes, he knows all the tricks, and he knows how to do a really good job. And a solid example of that, interest rates right now, extremely volatile, changing on a daily basis. We put this property into escrow this morning. Reed's the lender on the property, as he is on most of the properties that I do. When we were running numbers yesterday, the rate was lower. We opened escrow today, the rates ticked up. Reed figured out how to make that rate stick for my client so they were still able to afford and be comfortable with their monthly payment. Not every lender is going to do that. And I can't tell you how many times I've been listing a home and I have to deal with the lenders on the other side and just see how unmotivated they are, sloppy, terrible work ethic. When I have a listing and a buyer comes to me and their lender is Reed, I know the job's going to get done. So it's a very advantageous thing for our clients having someone like Reed in their corner here in Orange County, because he's built a really great reputation for himself here in town. And really, this is what we're trying to get to, right? So if you decide that it's time for you to purchase another piece of property in Orange County, we're going to have a conversation with Reed, right? You're going to go over your finances, you're going to go over your debt to income ratios, and we're going to look at your entire picture. And ultimately, what we need to get is this pre-approval letter. Now, ever since COVID happened, there's been a little change in how we're able to view properties. prior to COVID, if you wanted to go see a home, we would just show up, right? We'd open the door, we'd walk in. Now, due to the fear of, of COVID and all that kind of stuff, sellers only want people in their homes that are serious and are for sure shopping and buying. So a lot of these sellers are requiring a pre-approval letter sent to them before they will allow our showing. So we need the letter for that. But more importantly, this is going to give us an idea of what you can afford, what your interest rate looks like, so on and so forth, so we can analyze different opportunities for you. Every home has a different tax, has a different special assessment, has a different HOA. There's all these different factors, and they all factor into your monthly payments. Knowing where your numbers sit will allow us to analyze a single family in San Clemente versus a triplex in Dana Point versus a beach home in Laguna Beach, right? And so it's very important that we understand all this, and having someone like Reed on the docket, on the team, ready to provide this kind of information for us is super, super helpful so that we don't waste our clients' time. And again, we like to throw up the reviews. I've been sitting here talking about what a great guy Reed is, but here's a bunch of people who've also had an incredible experience with him. And here's him with his beautiful family. Please feel free to take a snapshot of this slide right here so that you can get in contact with Reed, but also make sure, oh, I thought I had another slide. I also have a $650 appraisal coupon for you guys from Reed. Make sure if anyone is interested in purchasing here in Orange County that you shoot me a message. I'll get you that coupon over. We'll save you $650 because if you do go to purchase, we're going to need an appraisal. Appraisal contingencies are back, and we'll save you some money. So selling a home, totally different experience right now than it's been over the past 2 years. We have a bunch of listings here at Marshall Reddick in Orange County, and so we're dealing with this on a day-to-day basis. We're seeing a couple new trends on the selling side that we want to make sure that you guys are aware of. And this is just a checklist that we go through. We want to make sure that you guys know that we are thorough and processed on how we do our business. But what I wanted to personally talk about is what it looks like to be a seller right now. So comps are a toughie at the moment. 3 months ago, homes were selling for what they were selling at a 3.5% to 4.5% interest rate. A year ago, homes were selling for what they were selling 3%, 3.5%. And those interest rates directly affect demand, which directly affects the price we're able to get you on a house sale. And so it's very important right now to price correctly. Over the past couple years, we were able to price a little bit high, see if anything came in. A lot of times, if we're in a very high demand area, we could put a premium on the listing and we would get it a lot of times, right? Because it was so affordable to purchase in Orange County. Now that we've shifted back to how the market was, pre-COVID, we were closing homes in 6% interest rates all day long. Pricing is way more important now. And something that's really, really popped up in the last couple months has been home condition. So with labor shortage and material shortage, home renovation is tough. The timelines are extremely extended. I just bought a home for a client here in San Clemente, and it was a total teardown. We bought the house for 1.4, tore it down to the studs, and we went to hire a 20-person crew. We had 20 people working on this home, and it took a year, literally 12 months. And a lot of that was just due to material shortage. Buyers today, when they are going and touring homes, like any other time, they want a home that's move-in ready. especially the millennials. And the millennial is the largest home purchasing group in Orange County right now. Millennials make up over 65% of new home loans. The millennial wants a turnkey property. So when they walk into a property and it needs work, it needs to be updated, it needs to be refreshed and remodeled, their first move is to go call a bunch of GCs. And they're getting turnaround times of we can't start for 6 months. And it'll probably take another 6 months past that. And so homes that haven't been remodeled in the last 3 to 5 years are struggling on the market, right? And so something to consider is renovating or selling as is. Now, if you have access to people who can renovate your home now, we'd highly suggest doing that. If you don't necessarily focus on the price point of what you're selling your home for, let's say, for example, you're moving out of state and it's coming to the end of summer and you need to get your kids into their new school district so they can start baseball, right? You may not be focused on how much money can I get for this home. You might be focused on, I need to sell this home so I can move. If that's the case, maybe renovation is not needed. However, if you're in the position of, I want to get as much money as I can for this home as possible, renovation is really, really key right now. And so that's part of this process, right? When this is over, I'm going to talk to everybody on this call, and we're going to analyze your situation. And if your home needs renovation because you need top dollar, we're going to look at, okay, what's the time frame? And what do we think the market's going to be like then? Does it make more sense to put the money into the renovation now for a higher price later? Or do we think that you will net more now, the way the market is, with your home in original condition? So it's something to consider, but that's something that it's a really hot trend right now. And a perfect example, I have a listing in town here in San Clemente. Beautiful, beautiful, beautiful home, big home on the golf course, gated community, gorgeous, ocean breezes, incredible home in really, really good condition. But it hasn't been updated in 15 years. I showed this home over 100 times. I had a number of buyers come in with their architects and their GCs going over plans, blow out this wall, we're going to open it up here, move the island, right? Just to bring it into today's style. And the time frames they were getting from these people knocked them out of the deal. We ended up having to adjust the price down to someone who was willing to wait upwards of 6 months in order to build the house how they want to. Something to super consider, and we'll go over it when we talk. So again, just a little bit about our marketing plan. You guys can screenshot this if you want to see the check boxes, but the tone here is that we handle everything when it comes to your home sale, right? If you do need renovation work, we can manage that for you. We're going to do full drone. We're going to do full video. A lot of us do full 4K video. We're going to do photos. Unlike a lot of real estate brokerages here in Orange County, we will be present every time your home is showed. A lot of brokers will just say, hey, there's a key box, go open it up. Let me know what you think. We will be there. We make it a point to knock on every single door in the neighborhood. This listing I have here in San Clemente, I knocked on 130 doors, all the closest neighbors. We do a really, really good job of making sure that there's not a single person that doesn't know that your home's for sale. And we guide the whole process. Super white glove, super low stress. We do this a lot. This is all we do. It's not our part-time job. This is our career, and we're very proficient at it. And like I said, please feel free to Google me, Google Marshall Reddick, read our reviews. Hundreds and hundreds of people say the exact same thing. So 1031, we're going to just touch on this very quickly. Like I said, we have an entire webinar coming up just on this. So if this pertains to you, let me know and I'll make sure you get that invite. But for those of us who own investment property, when you sell an investment property, you're going to get hit with capital gains, which dilutes your investment. However, we have an option here in California, 1031 exchange. This allows us to say, hey, we're going to sell an investment property, and as long as we purchase another investment property with the same value and the same debt service, we can forego, i.e. defer our capital gains tax, allowing you to keep that money in your pocket, purchase a new larger portion of real estate, cash flowing better than before, without having to give the IRS a bunch of your money. We have a 1031 exchange coordinator on staff. So if that is something that pertains to you, we literally have an expert to guide you along the entire way, and we do them all the time. I'm 1031ing 6 different homes out of state into California right now. This is bread and butter for us. We're really good at it, and we make it a very smooth and easy transition. So where to begin? And I'm a little bit ahead of schedule here. Look at that. Give me a call, right? Every single person on this call has a different situation. Some of you are investors. Some are looking to purchase your first home. Some might be looking to let go of their California home and move out of state. Some might be downsizing. Some might have just had a couple kids and now it's time, we need a couple more bedrooms and a yard, and so on and so forth. Everybody's situation is completely different, and because of your different situation, you're going to have an extremely different strategy in the way you approach whatever it is that you're trying to accomplish. So give us a call and let's dig in, right? We're going to evaluate your situation. We'll get Reed involved. We'll go through your finances, figure out exactly what your opportunities are financially, and then we'll start exploring the market. This is what it would look like if you moved to this city in this type of home. This is what it would look like if you moved to this city in this type of home. Here's the different HOA kind of stuff. These cities have Melrose, or these don't. However, the tax rate's higher here, so maybe Melrose makes more sense over here. We're going to go into the situation and pinpoint opportunities for you so that you can feel extremely comfortable in making a decision when you decide to move forward, right? Time frames, a lot of that, so on and so forth. Big thing here is to just give us a call. We can't get into everybody's, goals here on the call. There's a lot of people on the call tonight. But if you give me a call, we can personally set aside time for you and we'll figure out, what the best thing to do moving forward for you would be. And again, here's my information. Please feel free to take a snapshot of this. You will be getting a recording of this webinar sent to your email, so you will have this sent. However, feel free to take a snapshot and shoot it over to me. Give me a call, a text, anything at any points. If I'm not sleeping, I'm working on real estate, so I'm available at all times. And that's it, guys. Give you 20 minutes of your life back. Appreciate y'all being here tonight. Again, if anyone has any questions, please put them in the chat box. I'll make sure to get them answered for you. We look forward to speaking with all of you here tonight, and I hope that you found some value in our presentation. Again, please reach out for anything whatsoever. Have a wonderful night, guys, and we'll talk to you soon. Bye.